Namaste, I Sahil Virk welcome you to my YouTube channel Strategic Finance with Sahil. Today I will talk about the king of investment and finance, also called the Wizard of Omaha, the most successful investor in the world, Warren Buffett, whose company is Berkshire Hathaway. I will talk about his early life and career. What does Berkshire Hathaway do? Lastly, I will talk about his investment strategies that made him his net worth of $164 billion or 14 lakh crore rupees and how you can use these strategies in your investments. Now, first, let's talk about his early life and career. He was born in 1930 and bought his first stock at the age of 11, filed his first taxes at the age of 13, at an age where children don't even know the meaning of the words tax or stock. When he was in school, he made money by delivering newspapers, selling golf balls and stamps, doing car detailing, among many other things. In 1945, Buffett and his friends bought a pinball machine for $25 and placed it in a barber shop. Within a few months, the business grew and he bought more machines and placed them in different shops. After school, he did a BSc in business from University of Nebraska in 1950 and MSc in economics from Columbia University in 1951. After his studies, Buffett worked at his father's company from 1951 to 1954 as an investment salesman. Then from 1954 to 56 at Graham Newman Corp as a securities analyst, and 56 to 69 at several investment partnerships as the general partner. From 1970 to till date as the CEO of Berkshire Hathaway. Now, what we see from his life is that no work is small. Investment and business is a lifestyle and a mindset choice. We see such mindset in Indian businessmen too. You look around at yourself, for example, a local kirana store owner or a small manufacturer. These small owners are successful in their lives and make good money for their families and lead an independent life. No business gets successful in a day or a year. It takes years to do that because it takes time to learn the nuts and bolts of a business and industry. So work hard, dedication, commitment will make you a successful investor. Warren's father was a politician, unlike Indian politician who says my child will not work, he doesn't need to work, or delivering newspaper is below his level. This kind of an attitude and laziness and superiority is what spells dooms for the country. For Warren and his family, no work is small. With hard work, honesty and dedication, he has reached the pinnacle of success and power. This was Warren's life. Let's talk about his company. Berkshire has a market share of $1.1 trillion, that is around 1/4 of India's GDP. It is one of the largest companies in the world. Berkshire Hathaway is a conglomerate like Tata's and Sons. Management structure is also like Tata's and Sons, which is decentralized. It has 3.92 lakh employees across the world. Berkshire owns dozens of companies. Some of the companies are Geico Insurance Company, one of the largest insurance companies in the world. And Berkshire uses the premiums and invests them to buy different securities across the market. Then BNSF Railway Corporation, which operates one of the largest railroad systems in North America. Pacific Corp, an electricity utility company. PCC Manufacturing Company, which manufactures complex metal components and products for critical aerospace and power and energy sectors. Lubrizol, one of the largest chemical companies in the world. Clayton Homes, which is in construction. Duracell Battery Companies, you must have used its batteries, is also owned by Berkshire Hathaway. And dozens of other companies in different sectors. These are just the controlling companies. You can see that the portfolio is very diverse, just like Tata's and Sons. Now, let's look at the stock. Now, if you look at the stock, why is Berkshire regarded as a benchmark for investing? You can see from 1996 to today, it has returned to its investors 2,278%. In the same time, S&P 500 index has only returned 658%. So you can see a huge difference between Berkshire and the index and the market itself. How many times Berkshire has returned back its money to its investors. Now looking at the consolidated revenue, where does Berkshire gets its money from? You can see it gets a major portion of its revenue from insurance, and then of course railroad, utility, and all the other sectors that it has invested in. It gets a revenue of $371 billion last year. Now put it in context, India's total union budget, which was released in February of 2025, was $595 billion. So the revenue of Berkshire Hathaway is close to 60 to 70% of the total union budget of India. So that's why it is a massive company. It's so massive, it has so much cash, it can buy small countries on its own. Now looking at the costs and profits of this company, last year it made a profit of $88.9 billion. It made an investment gains from stocks and different investments of $52 billion. Now the profit of Berkshire Hathaway of $88.9 billion is more than the defense budget of India. So you can imagine just the profit is massive. It can fund the whole armies of a country. Now this was something about the company and why it is relevant. Why do we talk about this massive company and where Buffett has grown this to? Now how he has grown it to? Now let's look at the investment strategy of Buffett. Now Buffett follows the Benjamin Graham School of Investing, which looks at securities with price that are unjustifiably low based on their intrinsic value. Value investment focuses on companies' financials, where technical investing looks at stock prices and volume of how the price has moved historically. Now this is the book that of Benjamin Graham. It is a benchmark of investing, value investing. You must read about it if you want to do value investing in your life. Now some of the aspects of what value investing looks at in a company is company's performance, that is the return on equity, the company's debt to equity ratio, profit margin, is the company public or private, how much is the commodity reliance of that company, is the price or the stock of that company cheap. Now this is a very important factor and it requires a lot of projection into the future. Now how do you do that? This comes with experience, this comes with knowledge, this comes with all the resources that you have, and Buffett has a lot of resources at his disposal because he has a large company on his own. Now this is the theory that we talked about. Now looking at value investing in practice, now this is a very interesting part of the video. Please pay attention, because this is the how it's not talking about the theory, but actually how he has actually invested, looking at the financials and the actual data. Now first thing that you need to look at is the companies that and the sectors that Berkshire Hathaway has invested in. Now I talked about the companies such as Geico Insurance, Duracell Batteries, aerospace manufacturing, or utility companies. These are the companies that Berkshire has invested in. These are not very new and upcoming stocks, or these are not something that's like AI or Bitcoin. These are sectors or companies that are profitable. These are sectors that make a lot of money, may not be very exciting, but they make a lot of money and they are good businesses. So in your investment, you don't need to look at a company or a business that is very exciting. It just needs to have a good business. It needs to be a world leader in its own sector. Now, second thing that you need to look at is, in this graph, you'll see the companies that the investments, some of the investments of Berkshire Hathaway, the stocks that it owns. Now in 2014, in the left side, you can see it owned in 2014 Wells Fargo, Coca-Cola, IBM, American Express. These are some of the companies that it owned. In 2024, the latest filing, 13F, is the filing that is used, that the company files, Berkshire Hathaway files every quarter and tells you which companies that they're investing in. So currently they're invested in Apple, American Express, Bank of America, Coca-Cola, Chevron Corporation, and the values are also there. So now if you want to simply invest like and earn money like Berkshire Hathaway, you can simply go to the government website and just download this 13F form and see the companies every quarter. This is published, and see where Berkshire is investing, and you can simply invest in those companies and get the kind of return that Berkshire is getting. So you can simply replicate that. You don't need thousands of people behind you working full time. You can just follow this strategy. Now, if you carefully look at these companies, these are the companies which are market leaders in their own sectors, be it technology, be it Occidental and Chevron are leaders in oil and gas. Coca-Cola is a leader in CPG, and so on and so forth. So this kind of gives you an idea of how the company and Buffett invests in companies. Now, third important thing that you need to look at is the balance sheet. Now, when I was going through the balance sheet of Berkshire Hathaway, what I found was there is a huge change from 2023 to 2024. Now, if you look at from 2023 to 2024, Berkshire has decreased its investment in equity securities or stocks from 353 billion to 271 billion, and increased its cash by almost double, by almost 150 billion. The cash and short-term investments in treasury bills combined in 2023 was close to 160 billion. Now in 2024, it is close to 30 billion. Now, what does that mean? In 1 year, he's made a complete shift in his portfolio. He's decreased his exposure to the markets and increased his cash. Why is he doing that? Now, this is a very curious thing. Maybe he knows something that we do not know. The markets have done exceptionally well in the last 4 years. They've grown exponentially and given good returns. But there is a talk in the market that the markets are overvalued and there is going to be a correction in the market. So maybe he knows something more than us, because he sits with prime ministers. He has all the best people in the world. So it's good to look at this interesting number from his balance sheet. Now, moving forward, the fourth thing that Buffett says is that Bitcoin is a bubble. Now, if you understand money and you understand some of the interviews that he gave and explained why Bitcoin is a bubble, you would see that there is no intrinsic value to Bitcoin. It is you can say just a fad. Now people are making money on this fad, but in the long run, maybe 10-20 years, majority of the people are bound to lose money because of its inherent flaws of Bitcoin. Now you may disagree with that, but I'm just telling you what Warren Buffett is doing, and I would tend to follow a successful person, on his advice. Now, fifth important thing is that before investing, always do extensive research. He reads all the filings of a company that he wants to invest in. That means hundreds and thousands of pages of 10K, 10Q, 13F, and all the other reports that the company publishes, a stock publishes over the years. So these are the filings that a stock has to publish before going public. So a lot of reading, a lot of market research, a lot of due diligence that you have to do before investing in a company. You can't just go on a YouTube and listen to someone say about, hey, invest in this company and just invest in that company. You have to do your own due diligence. Now, sixth thing that Buffett says is that EBITDA is a flawed favorite of Wall Street, and it is not for us. This is from his actual earnings uh, annual earnings report that I've pulled this snapshot of. This is what he says, and this is what he believes in. And why does he say that? Now, what is EBITDA? EBITDA is earnings before interest, tax, depreciation, and amortization. Now, it is not taking, for any company, it is not taking the major cost. Its significant cost of a business is, let's say it takes debt or loans. You have to pay interest on that. Now, if you don't consider that in the profit, then, well, you can make any company profitable. If a company invests in its capital expenditure, it is going to have depreciation, huge amount of depreciation. If you don't consider that and you take in earnings before that, then it's going to be a flawed earning, because you're not taking all these big tax or depreciation or interest expenses. So that's why it is a flawed metric. And lot of startups go bankrupt because they invest so much in capex. They're not actually profitable. They may show that they're EBITDA profitable, but they're not actually profitable. And after a couple of years, when they run out of investor money, they just go bankrupt. So that's why EBITDA is a flawed metric that you should not look at. Now, seventh point that he says is that wait and then pounce. And now, an example you can see from his balance sheet is that I think he's waiting. That's why he has more than $300 billion of cash. So much of cash, he can buy the whole country of Pakistan. Well, it's a cheap country, you can buy it for 10 times less, but that's the amount of cash that he has. So maybe he's waiting for when the prices decrease, when things are cheap, he can just pounce and buy all these companies for cheap. Now, lastly, what he says is never panic in the market. Do not sell, only buy, mostly buy. Keep your investments for long term. Don't just go by the short term metrics of where your stock is going up and down. So these are some of the valuable insights that you can see from his balance sheet, from his investment reports that I've pulled, based on my analysis, that you can follow to become a successful investor. Now, if the stock market is too complex for you and investing is too complex for you, then what you can do is, if these things are too complex for you, then what you can do is follow 3 simple advice from Warren Buffett. The first is, Warren Buffett said and described the strategy in 2013 in his letter to his company shareholders, a 90-10 strategy, which calls for investing 90% of his investment capital in low-cost S&P 500 index fund. For India's context, you can invest in Nifty 50 or Sensex index fund. The remaining 10% to short-term government bonds or bank FDs, if you understand that. You can invest in that 90-10 strategies, and over a period of 10, 20, 30 years, you'll have a good return. There's a very high probability of that. Now, second priceless advice from Warren Buffett is that you should always plan to own a stock for at least 10 years, if not longer. Keeping in mind that business have to have time to evolve, it takes time. And if you look at the stock for a long time, you don't consider short-term volatilities in the stock market. So you eliminate that and look at the fundamentals and invest in the long term. Now, third very important advice that he has, and he continuously stresses on that, is that invest in yourself. Invest in the means to be successful. Invest in your knowledge. Invest in the financial choices that you make. So improving yourself, improving in your knowledge always pays off in the long run. So these were some of the things that I learned from him, and I learned from his investment style. So in the end, I would say that do your own research before making any investment practice or any investment, because it is your hard-earned money that is at stake. The stakes are always higher in practice than in theory. So keep learning, keep investing, and keep making money. So please like, share, subscribe this video, and follow me on Facebook and Twitter. Thank you and goodbye till my next video on Strategic Finance with Sahil. Thank you.